Hello, and welcome back to Explain the Charts, your go-to channel for in-depth technical and fundamental analysis. Today is November 14th, 2025, and we are diving deep into one of the market's titans, Microsoft, ticker symbol Microsoft. There's a lot of conflicting information out there right now, so our goal is to cut through the noise by looking at both the current events and what the charts are telling us. Let's start with the news, because the headlines have been painting a complicated picture. On one hand, reports from just a few days ago highlighted Microsoft's strong 17.9% year-to-date gain, primarily driven by impressive growth in its Azure cloud division. However, this positive news is clashing with a more recent and bearish sentiment. We're seeing major concerns about elevated AI and capital expenditure spending, which seems to be making investors nervous about future margins. Adding to the pressure are geopolitical and economic factors, such as newly announced tariffs on semiconductors, which are crucial for Microsoft's data centers. Furthermore, weaker-than-expected U.S. job data has signaled broader economic challenges, casting a shadow over the market as a whole. This has led to what some outlets are calling Microsoft's longest losing streak in over a decade, wiping out hundreds of billions in market value from its peak. So we have a classic battle: strong company performance versus significant market and economic headwinds. Now, let's see how this narrative is reflected in the price action on the daily chart. Looking at the full daily chart, we can see the broader story of the last year and a half. Microsoft was in a powerful uptrend for the first 7 months of 2025, culminating in an all-time high. On July 31st, the stock gapped up to a high of $555.45, which stands as the key resistance level and a major psychological barrier. What happened immediately after hitting that peak is a classic case of sell the news. Despite what was likely a stellar earnings report, the stock reversed hard on the same day, closing at $533.50. This created a massive bearish engulfing candle and marked the beginning of a significant downtrend and period of distribution. That single day showed that the market had perhaps priced in all the good news, and sellers took firm control at that $555 level. The selling pressure continued through August and September, finding some temporary support around the $500 mark. But let's focus on the next major event, the late October earnings report. Leading into the announcement on October 29th, the stock had recovered to the $540s. However, we saw a repeat of the July event. Following the earnings, the stock gapped down and fell sharply over the next week. This price action directly correlates with the news reports about investor fears over AI spending, even though the earnings themselves beat expectations. The market is clearly more focused on future costs than on past performance right now. This multi-day drop established a critical new support level, with the price bottoming out at $495.81 on November 6th. Now let's switch to the hourly chart to get a closer look at this recent action. Here we can clearly see the sharp sell-off from the high of $553 on October 28th down to the low of around $496 on November 6th. From that low, we saw a relief rally, a bounce that took the price back up over the course of a few days. This bounce, however, stalled out right around the $511 to $513 area. This level is now our most immediate and important short-term resistance. The price tried to break through it on November 12th, but was firmly rejected. This rejection tells us that sellers are still active and defending this territory. Following that rejection, the price has started to pull back, which brings us to the most recent price action. Zooming in further to the 15-minute chart for the last 2 days, the story becomes even clearer. On November 12th, we see the push-up into that $511 resistance zone, where it hovered before failing. Then, yesterday, November 13th, was a decisive day for the bears. The stock opened near $510 and sold off consistently throughout the entire session. There was almost no buying pressure, and it closed near its low for the day at $503.29. This intraday trend shows very strong bearish momentum and confirms the weakness we saw on the hourly chart. The The failure to hold on to gains above $510 is a significant bearish signal for the short term. So, let's bring it all together and go back to the daily chart for our final summary. To recap, the key price levels are absolutely critical right now. Major, long-term resistance is at the all-time high of $555. Immediate, short-term resistance is the $511 to $513 zone, where the recent rally failed. On the downside, our most important support level is the recent low, between $495 and the psychological $500 mark. If that level breaks, the next significant support area isn't until the $460 level from back in June. Now for our unbiased prediction. Given the strong rejection at short-term resistance and the heavy selling pressure yesterday, the bearish scenario seems more likely in the immediate future. I'd place about a 60% probability on it. This would involve a retest of the $495 to $500 support zone. If we see a break below $495 with high volume, it would reinforce this bearish outlook, and a move toward $460 becomes very possible. The bullish scenario, which I'd give a 40% probability, requires buyers to step in and defend the $500 level aggressively. For this to happen, we'd need to see the price reclaim the $508 level and then make a high-volume push through the $513 resistance. A break above that resistance would invalidate the immediate bearish case and open the door for a move back to the $530s. Things to watch for our volume on any moves towards these key levels and any new macroeconomic data that could shift market sentiment. This concludes our analysis of Microsoft. Thank you for watching Explain the Charts. Please remember, this video is for informational purposes only and is not financial advice. You should always conduct your own research and consult with a financial professional before making any investment decisions. Don't forget to like and subscribe, and we'll see you in the next one.